Hi everybody, Richard Tromans here again at Artificial Lawyer TV. Today we're doing a special interview with Nick Rishwain, who is the founder of experts.com and Legal Tech Live. Although it's probably not called experts.com, as Nick is about to tell me. What is it called?
Yeah, it is experts.com. I'm vice president at experts.com. I am one of the owners, but I am not a founder. I don't have that. And yes, I am a founder of Legal Tech Live. So thank you, Richard, for having me on today. Good to see you.
Good to see you too. And, me and Nick have been talking or interacting, probably not talking so much, but certainly interacting on and off for years and years, really, since I got started in this field. But today we're not here just for a general chit chat, although that would be very nice. What we're here to talk about is blockchain, cryptocurrencies, Web3, smart contracts. What is a DAO or DAO? Nick knows a lot more about it than me, and I've been looking for some time to have a chat with someone who could, illuminate this area. So Nick, let's take it away without further ado. So we're going to start off with some basics, just so if you're listening or watching, we're going to start off with some basics. People who know about this area will probably go, hey, I know that already. And then we're going to get into some more complicated stuff. But let's start off with some baseline stuff. So what is blockchain? What actually is it?
Yeah, so you and I probably, Richard and I were talking before we started as to the fact that we both got started in and around the same time. More, not that we got started, but we got more involved with legal technology and deeper involvement 6-7 years ago. And blockchain was a big buzzword at that time, you may recall, blockchain and cryptocurrency. So blockchain, the one thing, and even I for 4 or 5 years, right, from 2015 to say 2019, I knew probably what many of us knew about the blockchain, which was it was this distributed ledger technology that was immutable, meaning it couldn't be changed once it was on the ledger, right? For the longest time, that is about all I knew of it and about all I understood about it. So if we backpedal a little bit as to it is a distributed ledger, let's simplify that for the layperson. It's just a database. That's all it is. It's a database. They can be public or private. Most of what you hear about in blockchain is a public database for all intents and purposes. That's all it is. So you can think of it. As like you might have experience with Microsoft Access. I guess that's what my day-to-day experience is with a private database. This is just more of a public database. I think that's probably the simplest terms to put it in.
And what's the foundation of it? Is it that multiple people's computers are effectively acting in unison or in series in some way? Is that basically what differentiates it from a centralized server? So, for example, a law firm might have a server or a couple of servers where they're keeping internal data. In a blockchain type environment, that wouldn't be the case. There would be multiple parties who would share responsibility for running the database. Is that? Could you?
Yeah, that's a pretty good. So that's the decentralized nature, which is, I think, oftentimes a goal, not always accomplished. If you're talking Web3 in general, there's essentially it's built on the blockchain. And it involves decentralization, or that's that distributed aspect of this database. And another kind of third part of tokenization or token economics. But
we'll come to tokens in a second. Okay, so
sure. I'm just I'm trying to build a little foundation here and explain it for essentially. I'm running a node on my computer. You're running one on yours. We're in different parts of the world. And that's how it is distributed, or that's how the blockchain is distributed. And then if you have thousands or millions of people doing that, it is technically distributed. Now, there's some argument over that, because if it's a whole bunch of people running on Amazon Web Services, then maybe it is sort of centralized. But essentially, we're using math computations to accomplish some level of security for this blockchain. So you and I, our different nodes, our different servers are running mathematical calculations or formulations in order to say that this transaction that happened did in fact happen, and that is how it's distributed. Whether or not that's accurate is open to some theoretical debate. But is that clear enough for you? Does that?
Yeah, I think we got the general gist. But so, well, let's get deeper then. So, why is this of any benefit? I mean, it sounds kind of neat that this can be done, but we have databases. I have access to lots of databases. I'm sure you do. In fact, this is being recorded right now. It's going to a database of one sort or another. Why do we need this thing? What benefit does it bring?
So it's probably more philosophical in nature, right? It's basically an effort by users to take back control of data and content from maybe a few dominant tech players. Zoom is going to control our data here. Of course, you download it and you can delete it off of their servers or off of their cloud storage center and or data center. You can remove it from there, or so we think, right? But you think about having it distributed, having the content and the data distributed. These blockchain ledgers and nodes all over the world not really belong. The content and the data doesn't really belong to any one organization. So you have a system that is not relying on Facebook, not relying on Google, maybe not reliant on Microsoft or AWS, and that I think is the goal of decentral. That's kind of the ethos, is decentralizing this, giving power back to the users. Whereas what we've come to learn is that companies like Facebook and Twitter and Amazon, they use our data in order to sell us more stuff, in order to advertise to us, and their business model is based on what we're putting out on their website or their platform. So this is an effort by many to kind of wrest back control from the big tech players. More independence, more personal ownership, I think is the underlying ethos or rallying cry. It's been the experience that I've had in my efforts in the Web3 space.
Gotcha. And also, we've used that phrase a couple of times, Web3. What does Web3 mean? So we're talking about web access, web development, communication, so forth, data sharing via a blockchain framework, as opposed to one based on central servers.
Right. Yeah. So blockchain or Web3 incorporates essentially a variety of concepts. It's nascent. It's probably not yet Web3. It's maybe more jargon, but it's usually something including a blockchain. Then it deals with tokenization, which is just a bit of code. That's all a token is.
Well, let's very, very briefly. I mean, we could talk about cryptocurrencies forever. There's millions and millions and millions of websites talk about cryptocurrency. But just
sure,
in 10 seconds, what's a cryptocurrency? And obviously, people know about Ethereum and Bitcoin and all the other thousands of them that have popped into existence, and the way that the prices go up and down and so forth. But let's not get into it. Let's stick to the legal stuff. But just very, very, very briefly, how do you make a cryptocurrency?
It's essentially a smart contract code that is deployed, and a token. Tokens have been in use as a security protocol forever. It's essentially, if I'm not mistaken, I'm not a computer scientist, but if I'm not mistaken, a token essentially is a way to transfer sensitive data to non-sensitive, right? You've had to receive a token in certain. If you've had a database, you've had to receive a token at a certain point in order to access certain servers or certain databases. So a token doesn't have to be a cryptocurrency. It's just a bit of code that allows you maybe some access to something. the ones we're most familiar with, of course, the ones that took off is the token that was turned into a digital currency. And that is a token that doesn't rely, again, on a central authority like a government, the UK or the US, or it shouldn't rely on a central authority. So if we're focused on the decentralized nature of Web3, it should not be governed by a central authority, either a company or a government. That is what a digital currency is. So it's just a piece of code that, of course, has become pretty big in the financial industry, kind of creating a new financial industry.
Gotcha. And of course, the mainstream financial sector has got very excited because there's obviously ways to make money, and then you've got digital assets, digital securities, and all that coming out the wazoo at the back of it. But let's not get into that, because I think there's resources for people interested in cryptocurrencies. Let's stick to the legal world. Now let's talk about DAOs or DAOs, which is distributed autonomous organization. And I remember writing about this in around 2019. I was actually going to try and draw. I made a few notes earlier. And yeah, someone who, you know, I basically haven't spoken to for ages and ages and ages, Aaron Wright, who's based in New York, who created OpenLaw, and he created the LAO, which was this idea of a legal autonomous organization. And I'm not sure, I don't know where that got to, but then there seems to have been a proliferation of this idea of Lex DAO or Lex DAO. Did you say DAO or DAO?
I say DAO. Yeah, it's called Lex DAO. Most people use DAO.
So let's talk about it. So we've kind of outlined blockchain, decentralization. We talked a bit about tokens, not necessarily being all about currencies. So let's get into the legal use cases more, and let's talk about Lex DAO. What is a Lex DAO and how is it of use?
Yeah, so Lex DAO, actually, I'm a member. I'm on the operating committee of Lex DAO. It's, for simplification purposes, let's call it a legal engineering guild, or you could even think of it as legal engineering bar association if you'd like. It doesn't require you to be a lawyer, doesn't require you to be an engineer, but it's trying to build that intersection between legal engineering or the code aspect of things using smart contracts and the legal world. That's what Lex DAO is. So you can go and join Lex DAO. Everybody can join Lex DAO. You don't have to be a lawyer. You don't have to be a paralegal. You don't have to be an engineer. You may just have an interest in it.
What is it? But what is it? I mean, it's very open access, and that's very good. But what actually is it? So what would you use it for? What is this thing?
Yeah, it's essentially an association, unincorporated nonprofit association for legal engineers. So it's not unlike a bar association. You join it, and we're trying to build. We have a variety of projects in Lex DAO, working groups. It's more of a virtual bar association, if that helps the listener to understand what it is. But it's where engineers and lawyers get together and try and build a variety of solutions between the legal world and the decentralized or Web3 world. That's essentially what we're doing. Several operations have sprung out of it. Maybe I need to back up and say what a DAO is, because this distributed autonomous.
Let's do that. And then if you could just give a couple of concrete examples of the kind of project that people could do.
That Lex DAO is working on. Sure, yeah. I can do that. So a DAO is a decentralized autonomous organization, which is maybe what it is at its ideal. What they are today is just a distributed organization. At least in my experience, it is a distributed organization. That means people all over the world who are interested in solving some similar problem, some similar issue, and they organize usually in a Discord server. Discord's just a gaming social media platform that has become very common in the Web3 space. It's very much like a Slack. So a DAO is this distributed organization who has goals that they wish to achieve. That's all it is. within that, in the Lex DAO side of things, Lex DAO has tried to make it a platform where legal engineers can come together, or lawyers and engineers can come together and try and solve some issues that they see. So, for example, some things that have spawned out of Lex DAO is something called Kali DAO. This is just a Web3 software as a service, for lack of a better phrase. It's its own DAO that creates software that helps DAOs, because these DAOs don't really have any form of legal entity, right? And that's what people thought. We won't need a legal entity if we're this distributed organization all over the world. Well, we come to realize, well, that also leaves a lot of liability for all these people who might have a treasury or a sum of money that they're trying to distribute. There's a lot of liability involved. So Kali DAO, some friends of mine, colleagues of mine, created this that allows people, almost like a legal Zoom or Oliver app, something like that, allows them to essentially not incorporate, but wrap their DAO in a limited liability company, so that all these people who are participating via code are wrapped in some form of a legal entity. That's what they did. So think of, well, we all have to form a business. We all need a legal entity. This is a legal entity for the Web3 space, or for those who are building in the blockchain. That's what it does.
Does this document or this contract or whatever it is, how does that differ from a normal one that you would have for a bricks and mortar business? Is this a separate? And also, what's the jurisdiction behind this document? What law is behind this?
So usually there's a variety. I think Kali offers a variety of LLCs, I think out of Delaware.
You're using good old fashioned.
Yeah. So this is connecting the law and the digital world to some version, some regulated version. And so I think they generally use a Delaware LLC. There's I think Wyoming LLC as well, anywhere that has been friendly to these nascent legal entities that are being created, right? Because a DAO doesn't really fit all that great into several legal entities. Incorporation can become a problem, and it's not as flexible and so forth. So that's what they do. But there's others who are working on. We have a variety of working groups. The music and intellectual property working group, who are using code to add royalties. This is a very simple use of blockchain. You build in code so that the original artist gets royalties for every purchase, every additional purchase, rather than they just sell something one time and get that. They get a piece of the action for every additional sale. So those are things that you can do with code. So we have a working group on that type of thing. We have real world asset consortium, which is myself and James McCall and a variety of other people who are in the real estate and Web3 space, and we're trying to create a certain level of data or a data classification system, so that you may one day be able to process real property transactions using the blockchain. This would be an easier way to manage property in the long run.
And of course, people have tried that, haven't they? I mean, even
sure.
In the UK, there have been experiments trying to, people have, in a sort of sandbox type environment, people have tried, as far as I understand, trying to get the land register. So when they're buying and selling properties, that there's a type of blockchain immutability, a record that goes beyond just having it in a single database, and we should hopefully break down the amount of fraud and so forth which takes place in property transactions.
And I think it would, what we're doing is not an original idea necessarily. Others have tried to do it. We just want it solved for our own, and we want it solved for, at least James and I have this idea of those family run operations. It could be run easier on blockchain. So if we're using modern financial rails to operate a piece of property that's maybe closely held, it's Richard, Nick, and James own this, own a laundromat in Wyoming, and could we all agree to, hey, we need a new roof or something? All right, well, we all transmit the funds that we all have access to this account. We all transmit the funds through this. Somebody on site handles it. And so and then maybe on our monthly distributions or quarterly distributions, it's just automatically sent to you. You can
through
turn
a
it on
smart contract,
through a smart contract into your digital
which is
wallet
effectively a standard written contract, but with programmable aspects,
code.
which links out to
Yeah.
banks and payment solutions and so forth.
And so you could set that up where your monthly distributions or quarterly distributions are just streaming. So so nobody just gets to run off.
Still have to be underwritten by California law, for example, because I mean you're making transactions, you own property. Even if you create a blockchain layer that creates some kind of immutable register of it, you presumably, just for taxes and just for legal purposes of registering a property, you've still got to go back down to the real world and say, hey guys, me and my friends own this property, and that's the address, and we have to pay taxes on it, and
so
there's no way around that.
No, there's no way around that. So we're trying to make a way through it. What you can do, and what I do, and others in the US do, is usually we have an organization called an LLC, limited liability company, and an LLC can own property. The LLC can own the title of property. And so if we can allow, and I can go and buy the LLC from Richard, and the LLC still owns the property. So title doesn't have to change from Nick to Richard, just the company has to change. And so that's one of our workarounds. Another workaround is you can do this using a trust, where the trust changes hands. And by the trust changing hands, the property changes hands. So there's little workarounds like that we think are maybe beneficial. So Tater DAO, which is one of my kind of side projects, because we wanted to make a fun name for it, silly name, because it's one thing that the Web3 space allows us to do is be a little bit more silly and have a little bit more fun. So we created Tater DAO, where we're trying to use these LLCs to transfer property. It's not original. Others are thinking about it now. The really awesome stuff would be if our local land registries, our local recorders offices decided to.
Well, let's get to that, because I mean, incredibly, actually, some of the very first stories I ever wrote about were about smart contracts and blockchain and this kind of thing. I did a whole bunch of them in 2016, and then it kind of petered out. And it's come back with a vengeance in the last couple of years. But I guess, and the governments are getting excited about cryptocurrencies and digital assets, mainly because they think there's a way of making money off them, because they can tax them.
Yeah. Everybody wants to get their piece.
Yeah, exactly. If you can make money, hey, suddenly it's not such a bad thing. On this type of thing, on this decentralized approach to owning registers and controlling registers of property, of other assets, do you actually think the government's going to go for that? Because, I mean, you might say the foundation stone of all governments is taxation, and the other one is control of information, and then you've got the armed forces and the police and all the other various pillars that make a government. If you kick away control of data, and you just say, hey, the population controls all the data now, isn't that, I mean, are they going to go for that? I mean, does the government want to be, I don't know, have that taken off their plate?
Oh, I don't think they'll ever want it taken off their plates, because those are government salaries and government control. Nobody likes to lose control. at least in my experience, regulators don't like to give up control.
Well, they tend to. Bureaucracies. I mean, I think there's an old sort of Victorian law about the immutable growth of bureaucracies, and bureaucracy builds bureaucracy, and it just
keeps growing.
Mm.
That's the way that's been my experience.
Mm.
So I don't think they'll want to give up that control, but if they're simply a recorder, which is what we call the land registry in California, if it's just the recorder's office and we're just trying to keep data, I think this is a more efficient way to hold data. I think it could be a much more efficient way to hold data.
But like I said, I mean, I agree with you. It does sound to be more efficient, more economical, and if it's immutable, even if there are bad players, they should be weeded out. But all of that said, how do we get there? I mean, is this one of these scenarios? And maybe I'm being devil's advocate, but I think
no, please, yeah, you do.
And this is where a lot of the cynicism, obviously, as you've seen, comes from. People just say, okay, very cool, but no one's ever going to use it for real, because the people who actually have the power, people who control currencies, people who control national registers of who owns what, not going to let that stuff go. So you can build all these things on top, but you won't replace them.
Right.
You can't replace them. You're just adding an extra level of, data management on top of the old-fashioned one, which they won't let go of.
Right. It's going to take decades, Richard, for anything to change here. And I imagine it's certainly when you're talking about those bureaucratic institutions who generally don't want to do anything new, generally do not want to innovate, and do not want to lose control. With that said, you talked about, so it would have to be legislative changes long term, which is why we've opted in Tater DAO to try and go around that. I can own an LLC that can own a piece of property. I don't have to, the title does not have to change. The company can change hands, and the property stays in the company. That's very common. You can use special purpose vehicles to change ownership as well, which is again why our thoughts are, even from a financial management perspective, if I want to own a piece of property with my family, and we could just manage it through where we all live in different areas. My brothers and I live in different areas, but we could manage it financially through on-chain transactions. And I think that would speed up interaction. You don't have to wait for somebody's check to come in the mail. You don't have to wait for, maybe not everybody banks in the same bank. If we're all on, say, the Ethereum blockchain, we can all submit funds to one wallet address. That wallet address can belong to the LLC, and that can be used to manage property, distributing funds, submitting funds, collecting capital, allocating capital is just really fast on blockchain. Some people think
also cross-border. I mean, Ethereum is Ethereum wherever it is on the planet.
Wherever it is on the planet. And
if you change dollars into pounds, pounds into dollars, there's transaction costs, there's conversion fees, there's all kinds of ways to get through.
In time, if I wire, we've got at experts.com, we've got developers in India, and if I have to wire them funds, I have to go and do it face to face at the bank. Usually takes a few days to do it. It's very very slow, very outdated modes of transportation, and I forget what their fees are on that. A buddy of mine in Canada built a website for me one time, and I couldn't just send him the money over PayPal because we were in different countries. And I was like, this is ridiculous. I finally had to send him a check in the mail. Now, there's pluses and minuses depending on the traffic on Ethereum at any particular time. You may spend a significant amount of money in transaction fees, or you may send little. But efficiency-wise, it's very effective. And I guess I should add to that I pay taxes on everything I've if you're smart, you just pay taxes on it. So any money I've made in Web3 or in cryptocurrency, pay taxes on it just like anything else. So because you have to get money on chain somehow, right? And then you have to take it off chain somehow.
Well,
and
it's a
always
bit like Ready Player One, isn't it? I don't know if you've seen the film or read the book.
Yep.
You know, eventually you've got to come back to the real world because it's the only place where you can have a real dinner.
Yeah, so I somewhere have to interact with something that the government is aware of. Plus, then it's all public at all times. And I'll tell you the real fun one that's made the real fun use case that's legal that government will probably never approve. But you can go and you can see all the transactions I've ever done under my wallet, right? So you can see what money I've made, what money I've lost. You can see that. And where it would be really fun, Richard, in the US, we've had a number of cases of politicians capitalizing on the COVID crisis and selling or buying stocks at a certain time, right before the shutdown. You know, maybe they have some insider information. Well, if we could just have them on the blockchain, their transactions on the blockchain, like mine are on the blockchain, then we would all know what transactions. So for transparency in government, then we would know if they're following rules that are set out for them for their ethical transactions. Now that would be really
an argument, which is that it's in the public interest.
Mm-hmm.
But we're running a bit out of time, so let's just cover two things quickly: NFTs, non-fungible tokens. I remember writing about this a couple of years ago. I think there was a thing, I think it was in Hong Kong or Singapore, and it was actually an auction house, and a bunch of lawyers and engineers had done something, and it was like partial ownership of a painting or something, and then it really seemed to snowball. Points, and like now the problem is, maybe I'm showing my age, but NFTs of gorillas and dogs with funny hats on, I don't know, it's not helping, but it's not helping the idea behind it. But there is actually a serious idea behind this. In terms of the legal world, is there any actual sort of practical benefit to, and maybe just go back into what is a non-fungible token?
Yeah, so it's again just a piece of code, right? It's a piece of code that I own because it shows in my smart contract wallet or my digital wallet. So it shows that I own this bit of code. And of course, the funny aspect of that is if that bit of code has a picture on it, people
which is unique, and you're theoretically not, no one else is then meant to use it.
Is then meant to use it, but
making a limited print, and you buy one, and technically no one is meant to go off and then photocopy that and flog it. That is meant to be unique, and it meant to be
unique. They don't look very unique. They all look very similar. Especially on what they call the PFPs, or profile photo type of NFTs.
I imagine basically that's just irrational exuberance transferred over to the world of cryptocurrencies and blockchain, and it's just silliness, and it's no more daft, I guess, than in the 1980s, yuppies buying expensive executive toys to stick on their desk or some other nonsense. Right. Being serious, do NFTs actually have any real value to the legal world?
Yeah, so I think they do. I think if it's just code that identifies something, a friend of mine, Chris Draper, has a evidence company called Troct that I interviewed over on my pod, and they were using that SHA 256, which is just a hash or a cryptographic code that is admitted by is the evidence standard in federal courts. Well, if you think about attaching that hash to evidence, or that bit of code to evidence, to say timestamp it, know that this was original at a certain time, right? If we bring it back to legal technology,
like for example, a police video, they haven't done anything with it, or they haven't sent it off to a friend who's
the second it's uploaded to the blockchain, that police video, there's stamps on it. Okay. So one that maybe is released later that doesn't have that stamp, okay, something's been altered.
But a stamp is the same thing as an NFT, or I mean, or are these two
Code.
different things?
They're two different. The NFT just has a bit of code in it that is showing that something happened at this time. And so showing that Richard owns this picture of Nick dressed as a bored ape or something like that. So it's just a bit of code attached to a file. That's all it is, attached to a digital file.
So just going back to the video example.
So think of it as
NFT would be shipped with the video to the court.
Yeah, or that code is on there saying that this is a legitimate. This was updated when it was uploaded, or this is what this video was at the time it was uploaded. That's essentially the same as an NFT. It's different than the NFTs you and I see, but it's the same or similar code that is just identifying ownership or identifying a time.
So could an entire legal document become an NFT?
Sure. Yep. We thought about doing it at Lex DAO as a fun operation where we upload Supreme Court cases, the actual opinions, right? Just as for fun. You want to own one of course. You can go and get these opinions other places, but you want to own, we thought about it as a fun interactive thing. You want to own Brown versus Board of Education opinion, and maybe we do something fun with it, but in that document you would own that. Here's the other thing that we can do, what we've talked about when I referenced Tater DAO. If we put that LLC document, which is just a piece of file code as well, and we put that in an NFT, so that LLC that owns this building that I'm in, and it's all code, then I could actually sell the building if I'm selling the LLC, right? There's a couple of layers there. If I put the LLC, the bit of code that is in the LLC, and I put that in the NFT, just another bit of code, and then I sell that NFT, did I transfer the ownership of the building? Well, if I transferred the ownership of the company,
because
then yes,
NFT is unique.
That's unique.
So
there's some fun things there, but you can see how this complicates it for the average user, right? None of this is really intuitive. I guess I want to come back to that.
You know what it reminds me of, actually? It reminds me of bonds, particularly sort of, you might say, bearer bonds, where if you physically have your fingertips on that bond, you own it.
Right.
So
if that bond is in your digital wallet, you own it.
Yeah, and then we get into the digital assets, and I can see now why investment banks and other parties are getting excited about this stuff, because it's a whole new wave of financial products that they can sell. Exactly. Yeah. And which I think getting towards the end, the one thing that's always bugged me about cryptocurrencies and anything that leads back to cryptocurrencies is their volatility. And I remember coming up with this by myself, and other people independently have come up with the same thought many times as well, but because it's obvious, which is that if you've got pricing volatility, then how on earth can you conduct transactions? So let's say I'm a law firm, right? Let's say I'm a big law firm, not a huge one, not a global one, but let's say I'm in millions of dollars, and I do a big piece of work, and someone pays me $1 million worth of Bitcoin, right? I'm pretty happy, and then the price crashes by 30%. Unfortunately, it's September, and I have to do a profit distribution. My fellow equity partners are going nuts because we don't have the money.
Right.
Because we did have the money last Tuesday. It was literally there in my wallet, in the company wallet or the law firm wallet. But now that money is worth 30% of what it was, and we're in big doo-doos.
Right.
And I know that there are tethered cryptocurrencies which track
pegged to US dollar or pound.
Then what's the point? You might as well just get yourself paid in dollars and hold on to
in
it.
Dollars.
So it's like, so how if and at the moment, I suppose the argument is in 10 years, all of this variability would have dropped out the market. But they said that 10 years ago, and it's still very volatile. So it's right, risk versus reward. Do you want that
do you want that Bitcoin, that $1 million worth of Bitcoin, even though, it dropped 30% before you had to do the distribution. So now it's worth 70% of what it was, but might it go back up to $65,000 a Bitcoin? And if it does, Bitcoin US
You're
dollar,
going to make an even bigger profit, and everyone
you're making a bigger
laughing.
profit. So it becomes what's your, I guess, what's your investment thesis, and do we want this as, do I want to hold this for the long term?
I would imagine, given that lawyers are generally risk averse, the answer would be no. At least, I mean, maybe 1% of total income could be in cryptocurrencies, but I would have thought very few law firms, certainly larger law firms, which have very large expenses, would want to go down that road.
I imagine just for ease of use right now, probably most of them are getting paid in US dollars or pounds or however they want.
Well, I mean,
some of them
there's a
will.
big enough problem just with being a global law firm.
Yeah.
The pound suddenly drops dramatically against the dollar, and oh man, how are we going to figure this out? I mean, luckily, obviously, well, we could do a whole episode on this, but it's not really for legal tech, which is that large law firms are generally broken into multiple
separate entities.
Yeah, all around the world,
right?
Which helps to alleviate some of that problem. And there are very few law firms that are global that are actually a single partnership for real.
Right.
In pure legalistic terms. But anyway, going off the subject. But just to wrap up, I guess I get. So I mean, I think where it looks to me is that all of this does, on paper, look genuinely useful. I'm not so sure about cryptocurrencies in general, to be honest, and I don't think I'll ever be completely convinced. I mean, maybe if we get into a Mad Max environment and central government collapses completely, and we've got like micro satellites with servers on them, and you just got like people living out in the desert, and they need to create some kind of like post-anarchy economy. Cryptocurrencies kind of make sense, but I think while we're sort of in the normal real world, pre-apocalypse, I think we should probably stick with the currencies we've got. That's my personal view. But on the distributed ledger, the idea of driving efficiency by taking away central management of data, both on the government side and also on the large corporate side, that does seem to make sense. However, the challenge there is like, how do we, without it just becoming like a twin track approach? So like all these guys and girls created this awesome parallel universe, but the real world just carries on. And if you don't pay your taxes and you don't pay attention to it, the IRS will come and grab you. You're going to get in trouble for whatever. It's like, so how are we going to bridge this gap?
I think only time will allow for that. I think time and efforts, certainly the crypto world or the Web3 world had some great times last year. Financially was incredible, and they put forward quite a bit of money into lobbying efforts to change laws to be more. In fact, I just because you invited me in on on a LinkedIn blockchain thing, I saw the UKJT, the UK Justice Task Force, is that right?
Justice or Judicial Task, something like that. They're basically, for listeners, basically there's a group called Law Tech UK. It's funded by the British government, and what they're trying to do is either drive the creation of legislation or, using existing legislation, produce clarity around the use of blockchain, smart contracts, digital assets, and so forth. And the idea is that they're hoping that the UK, or at least England and Wales as a jurisdiction, will become more of a centre for both the production of legal work for those types of products, and also the solving of disputes.
Yeah,
relations. I mean, and I mean, that's, of course, it's ironic, of course, because the you might say the libertarian dream is that we wouldn't have to end up in the High Court in London with a bunch of barristers wearing wigs arguing at £1,000 an hour about who owes what.
That's everybody's dream. I think where Lex DAO, and probably where I come down, and many in the legal space come down, is that's a wonderful dream to have. It's probably unrealistic. So the more likely outcome, rather than your utopia, which may not be a utopia by the time you get what you want, if you got
Mm.
what you want. I think the more realistic thing is you have to change legislation, you have to change regulation. UKJT seems to, from what I read it on Artificial Lawyer as well, but seems to have this thought of how do we make English law welcoming to this technology, because that brings in the financial benefits for the UK and Wales, or England and Wales. That brings the financial benefits if we're more welcoming. This is something that so far the US government has been less apt to do. Some of the state governments have been looking, how do we be welcoming to this technology and this innovation so that we can benefit from it, right? And goes back to the taxes. UK seems to be doing that better, or at least from what I've read so far. And I think that's where it has to be led by governments. Well, it's never going to be led by governments because they're mostly reactionary, but crypto has become big enough, or Web3 has become big enough, that they have some financial backing. They can now push legislatures to maybe think more openly towards this and think of the benefits and not just the fears related to it. And I think that's what I would like to see happen. I'd like to see legislatures and regulators work to benefit innovation rather than stand in the way.
Interesting. There's also
with
I mean, if you look at the financial institutions, you know, there's obviously been some tension, including in the US, with crypto exchanges, and you can see traditional, you know, exchanges seeing all the money being sucked into these crypto exchanges and going, hey, that's not fair. You know, this could be cash that's going into our, you know, the shares on our index or whatever.
Right.
Ironically, the reason why it really took off is because all the people who've got lots of spare cash, i.e. people on Wall Street, are sinking all their money into cryptocurrencies.
Yeah.
It's the same as in London. The reason why it's taken off is because a bunch of people who are relatively rich already have said, hold on a minute, we shouldn't be fighting this. We can make a ton of money on this, and started pouring the money in. And then the accountants get in, the lawyers get in, the whole thing starts churning over. And then, you know, as you say, I mean, it's an interesting one, isn't it? And then I guess eventually government just simply has to catch up with where the City of London is or where Wall Street is. And I don't know. I mean, in the US, do you feel, is it kind of visceral? Do you feel these like different power blocks forming? Like,
I think so. I think that will happen. I think it has happened. Certainly, the nice part about it in the US was that many of those who had money did not necessarily come from venture capital or Wall Street. Like if they were in early enough, they made a lot of money individually. So some of those who have helped support lobbying and regulation reform came from the decentralized area. But yeah, there's going to be certainly. If I bring it back to you for simplicity's sake, we've had currency trading forever, right? Because the world is filled with a variety of different currencies. So people have speculated and traded and done that forever. And this is just a new version of that, and it's all digital. At least some aspects of what we discussed is just a new version of that. So I think in the long term, governments will. There are concerns, right? I don't want to be only positive because it doesn't do anybody any good to only say the good things. But certainly there's anti-money laundering and issues like that they want to watch out for. Whether or not those have been effective, even with the existing regulations, is another thing. And of course, cash is still king for anybody who's trying to do something wrong. So I don't buy into those cryptos only for nefarious purposes. I just don't buy it. Because cash is definitely used for nefarious purposes more than anything. So
well, you've only got to watch Better Call Saul and
right,
all of that kind of stuff. Yeah,
absolutely. Right. So I'd like to see the US or even California and New York do do something more like the UK is doing and take a more balanced and innovative approach. But then again, Richard, my whole Legal Tech Live podcast has been talking to the entrepreneur, so I'm kind of gonna side with the innovator's role. So, but I do think regulation can't be avoided. I know it can't be avoided. The regulators always win. So maybe we could, maybe we can find a way to help them do something that is better for the technology in the long run that they may also benefit from. I think that would be my end goal.
Yeah, and and there's good historical precedents for all of that. I mean, eventually, there is a groundswell and things do change. But
yeah,
when it will happen. So just to wrap up, very last thing. So
sure.
if you're a lawyer and you're a legal technologist, legal innovation head, CTO in your law firm, or in-house when you're listening or watching this, I mean, you might be thinking, okay, this all sounds really interesting, but I'm still not quite sure how to start, how to apply any of this. Can I apply? I'm still not sure if I even can, or if I present this to the partners, they'll go completely bananas at me. Or, we might advise our clients on digital assets, but we're certainly not going to start doing this kind of stuff.
Right.
I mean, open question. I mean, I don't know. I mean, what would you say to them? You'd say it's going to be here in 5 years. It's here now.
Yeah. So I think I'd say it's here now. Do you have to know everything that I just talked about today? Probably not. Do you have to know deeper than I talked about today? Probably not. But do you want to know enough so that you can get some of these clients who are making millions of dollars? Do you want to understand the regulations enough, money transmission laws, rules related to technology and source code, regulations related to that? It probably for the in-house or the large law firm, I'd be thinking, much like Wall Street, how do we not lose out on the business that these people are, if they're making a ton of money, how do we get this business? So I think that's where my primary concern would be. And they can pay pretty good, or I can get equity through a token sale. Maybe we want to be on that. So that's where I would, in my mind, it always comes down to how do we bring in more business? Do I need to know about document authentication or blockchain notarization and authentication issues? Could be helpful to you. Probably one day you'll be dealing with it. But I think for me, it'd be, all right, I want to get to know this because I don't want to miss out on a really great business opportunity. Probably what interested me from the beginning, if I'm honest. I got sucked into Lex DAO because I thought it was another another portion of legal technology. So, and it was where I was comfortable learning about this stuff, is learning with other lawyers who had bar cards. So I figured that it would have there was going to be some ethics behind it. We didn't want to break the law doing it. So that was where I got my entry. Within that, then it became an investment interest for me.
Fantastic. Thanks, Nick. Well, there's a lot to digest there, and I think we'll probably have to come back and maybe break this down further and get into some more discussions. But thank you very much. It's been really helpful, and I'm sure everyone listening found it really helpful as well. So thanks very much, and let's talk again soon.
Let's do it. Always good to see you, and thanks for inviting me on, Richard. Always great to catch up, and would love to come back and do this on occasion.
Definitely. Thank you. Bye-bye.
Bye-bye.